So the same thing continues again. We have one down day and one up day. Last Friday was the down day, and then the first day of the week was indeed a very good trading session because all the indices were traded in the green, and at the end of the day, Nasdaq up by nearly 1.5%, S&P 1.14, and Dow Jones 1.11%. But the problem is, do we want to take these moves seriously? Because when you are looking at the broader picture, or when you are looking at the price action for the last 2 months, there is nothing that has happened. Okay, so that's the big problem. And the next and the most important question is whether you do want to delve into this kind of price movement. The simple answer is no. Problem here is the market is highly data dependent, and any surprise on the negative side could probably push the market much bigger than you can see things on the upside. As we can see, the headline: stock futures are little changed as investors ready for the latest inflation data. So when the market is completely data driven, and market is indeed waiting for the inflation data, any negative surprise could damage this move, and these are just day trading moves. Okay, I'm not talking about the specific stock, I'm talking about the overall indices. So these moves are very data driven, day driven, and normal trading action. Anyways, so if day is data dependent and data heavy, you better prepare yourself not to enter into those kind of trades which you don't understand. Now look at the price chart of Dow Jones. You can clearly see, if you want to trade the range, you need to understand the overall range first of all, and then try to trade the edges rather than entering into any position. If you do enter into any kind of position without understanding it, then it would be a very dangerous thing to do. And that's why I keep on saying, for the last 2 or 3 weeks, that trade the edges. Don't try to do something which you don't understand, and I'm not at all interested in a breakout or breakdown. Everything is happening within a range. Right now for Dow Jones, we have 34,364 as our resistance, and on the downside we have 33,360, which is our support, which simply means if Dow Jones will test the resistance again, uh, it's better to take a short trade with immediate resistance or stop loss of 34,365 and a target of 33,360 on the downside. Simultaneously, if it hits 33,360, we will go for 34,365. That's it. If Dow Jones has to go higher, it must sustain above 34,365, or it may fall below 33,360 before we initiate our short trade. If it is in the range, I'm not going to predict that this will be the outcome or that will be the outcome. As simple as that. Talking about the Nasdaq, I mean, Nasdaq in the past couple of days has turned very volatile after such a humongous move that we have seen, and that's why it's better to keep ourselves dry and out of the trade, at least to understand the price movement. Right now you can clearly see the range is shifting, or the price action is shifting. Okay, so that's why. And when the indices is highly volatile, you know things can change very fast, so you need to be extra cautious, a bit more or extra cautious before entering into any trade, because this will definitely burn you or damage you. So don't do something like that. Right now what we can see, I mean, I thought that this was the low 11,645, but looking at the current price action, it's look like Nasdaq is moving towards 11,500, and you can see right now you have your resistance at 12,000. If Nasdaq moves and sustains above 12,000, 12,005, 12,010, then we can go for any upside price movement. Otherwise, if it hits 12,000, it will hit the resistance. So the range for Nasdaq is 12,000 on the upside and 11,500 on the downside. So some more downside is still left as far as Nasdaq is concerned. So you need to understand these minute things before taking any trend. Do not simply jump into the market because market is moving higher and you need to take the trade before you lose it. So that will not happen, because most of the professional traders and institutions, they have the upper hand, because they are trading with machines. You cannot beat them, as simple as that. Neither you have the resource nor you have the money. So when we know our negatives, so why are we doing something, or why are we playing such games where we know that the chances of losing is much higher and the probability is winning is extremely low? So you need to decide your own blind spot. As far as S&P is concerned, I want to be very restrictive, because 4155 is going to be our resistance on the upside, and if it founds resistance, if S&P finds resistance, then we will move towards 4044, in between 4028 and 4044 as our next support level. Because if you are looking at the price movement, you will see something like this. Okay, this is the fourth move, and probably this will be the fifth move. So you need to be a bit more extra cautious about the price move or the things that are happening right now, because market is not at all giving you any clear signal. Even if you can see big price movement happening on intraday basis, but does it change the trend is the big question, and the simple answer is no. So this is the end of the video. Thanks for watching.